Friday morning, another week in the bag. But before we do that, we got a big one coming up here today. I'm your host, Shad Dales. Thanks for checking here this morning, our latest Trade to Black podcast. Ziad, Ghanem, CEO of TerrAscend, and their chairman, Jason Wild. Haven't been on in a while, but they're coming on in just a moment. As well, Trent Woloveck. He's the chief strategy officer of Jushi. But outside of that, he has a lot of political connections, both in the state of Pennsylvania, Washington. We're going to dive into some of the latest news that's happening in Washington pertaining to safer banking. And then as well, just some progress about adult use and this new appointment of Jeanine Pirro yesterday. I find that interesting, what her impact could be regarding the rescheduling process, because she is a supporter of medical cannabis, but not full-on legalization. So we'll get his take on what that means. So a big one coming up. If you're a TerrAscend investor, this is a podcast for you. Heck, if you're a cannabis investor, this podcast is for you. So with that, let's welcome an AV on a Friday morning. Good to see you. How are things?
Good to see you. It's good. It's good.
Good little week, huh?
Got a lot to talk about. Busy week. Still kind of going through everything that's been posted this week in terms of earnings. Kind of getting some bearings on what a lot of stuff is going to look like moving forward. For the rest of the year. I know we got Ziad and Jason on. Today was nice to see the ATB note, which we'll go in further. But yeah, it's been a real busy week. A lot of information to digest yesterday. Earnings were coming out left, right, and center, and then all the major psychedelic companies reported earnings yesterday as well, with MindMed and a couple other of the big boys.
I missed that with MindMed. Anything you want to share?
I haven't had the opportunity to go through them yet. I realized when I was putting the newsletter together last night that all of the majors in psychedelics basically reported yesterday. Yeah, and I haven't had time. I'm going to go through it on Sunday.
I did see some somewhat positive stuff related to Cybin with a few posts that were made. But yeah, dude, bro, good to see you. It's Friday. Okay, with that, let's welcome in two of the good guys of the industry, chairman of TerrAscend, Jason Wild, and the CEO, Ziad Ghanem, back to the podcast. Good to see you, gentlemen. I think Ziad's coming up. There he is.
There he is. How's it going? Hello.
Two of the biggest smiles in the industry. How have you guys been? It's been such a long time. We miss you guys. How are things? Jason, I'll start with you.
How have we been? We've been all right. Just, fighting the good fight, trying to control what we control. How long's it been? It hasn't been too long. Probably a month and a half or so.
I think it's been probably 2 quarters.
Guys,
I think you guys
have been on it.
That's the last time we were on? I thought we came on in between.
You didn't come on last quarter for the full year, and then we had you on the quarter before.
Nice to see you guys.
Yeah. And some announcements earlier this week. Everything is old is new again, where there's an acquisition that's made, and we haven't seen that in a while. But I was looking at some of that and some of the geographical locations. What is it called? Goshen Township in Ohio. Am I pronouncing that correctly?
I think it's Goshen.
Goshen. So no competition within a 20-mile radius. Impressive. But nice to see some expansion in these days, because you don't see that too often, right?
Not over the last few years, but no. And we've been hard at work on getting some deals done for a while. I know we had originally said how Ohio was a priority for us. A year and change ago. I'm glad we didn't pull the trigger before rec started, because it hasn't necessarily been as strong as people expected, and the valuation expectations were much higher back then than they are now. So got this one deal done. Hopefully we'll get some more done in Ohio now with sort of some reset expectations.
Yeah. Ziad, we keep hearing during this earnings season, discipline is the term that a lot of people are using. You can't underestimate that. And really holding serve may not be a bad thing, considering the times where, with not a lot of new markets going on live. But from an operational standpoint, what are some of the things, I guess, that, you've endured over this last quarter, and some of the things that you may want to highlight to your investor base that you thought, hey, look, given the conditions that we're in right now, this is something that we shouldn't overlook, and you're, I guess, most proud of?
Yeah, I would say what we are proud of the most is, going down the P&L line, starting with revenue in a tough environment coming in line with our expectation. Gross margin beating our expectation, and for 5 straight quarters continued to improve. Our OPEX reduction of 1.6 million on the heel of reducing 3.6 million the previous quarter. All those resulting in an EBITDA that beat consensus and our expectation. So I would say those are the highlights from a P&L perspective. Internally, the engagement of the team, the loyalty of the team, the passion of the team, Jason talked about those yesterday, is really what is allowing us to stick to a plan and a strategy that we designed 3-4 years ago and really executing it to the detail. And it is allowing us to show what I described. But also one thing I'm proud about the most on top of those is the market share gain in the states that we are in, whether it's state by state or even if you aggregate all of them. We were the only MSO that has gained market share for the last 5 quarters when you aggregate all those, and we're organizing those to share them also publicly. So all this is what really makes me super proud of the work that the team has done. Jason, what did I leave?
I think you covered almost all of it.
How are you doing that? Because we're not seeing any other companies do that in terms of being able to grow in these markets and maintain your market share. Are you doing it via form factors and data, brands, pricing? How are you achieving those metrics?
I think
metrics at that.
Yeah, it's down the line, right? So we have a playbook. We have plans that we identified a few years ago that start with COGS, then revenue, then gross margin, then OPEX. And then below the EBITDA line, Jason can talk a little bit about the financing. And he mentioned yesterday in his 6 points what differentiate us and our tax strategy. But starting from the operation, from a COGS perspective, we knew there are price compression. Price compression is real. Price compression is there. You look at New Jersey in 2024, between January and December, went down from 4,800 to 4,000. So you have on the production per pound, you have on the COGS side to maintain your quality, maintain your innovation while reducing your cost of production. So that is the playbook, and that's what we're focusing on. And that's through the brand partner, through our own brand, through new strains, through new form factors, through being first in market. And that plays a major role on the revenue and the market share, but also on the gross margin. So
also the ERP, right, has been very helpful for us to know what we need, when we need it, be able to make all the sales that we possibly can, and not being short in supply of what people need or want.
Yeah. So I was going to say, how sustainable is this to have, like, say, a 50% plus margin environment, I guess, in these, as we know, regulatory and cost landscape that we're currently in right now? Like, how sustainable is that?
We talked about it on the call yesterday that we have a good view for 2025, and we shared that 50% for us is where we see ourselves for the remaining of the year. And there are multiple reasons for this. COGS, what I described, the different states that we are in, the dynamic in each state, but combined, this is where we'll be. And keep in mind that is impacted by 35-40% gross margin in Michigan. So that's a drag on our gross margin. Taking that into consideration, we still feel pretty good about our 50%.
Well, one of the markets that a lot of other MSOs have talked about is New Jersey. You guys are shining in New Jersey. You just entered into an agreement to expand your New Jersey footprint. Is that signaling that you're seeing stabilization in that market and now is a good time to enter, and you can deploy that playbook against the asset that you acquired to continue to grow and maintain that market share in that market despite other retail and other assets coming online?
See?
Yeah, absolutely. The answer is yes. We actually feel that our top priority is New Jersey, and by increasing our store network to 10 and verticalizing those, especially with the accretive deals that we are doing both on the cash flow and EBITDA. It's a state that we are expanding our manufacturing facility. We are expanding our cultivation facility in anticipation our inventory is very healthy in anticipation of new wholesale accounts, but then also our own stores that what we did in Maryland, they come in with zero verticalization. In this case, they're not zero. They have 10% shelf space because they're our wholesale account. But we can, there's a good 40, 50, 60% room of verticalization that even make those deals more accretive.
Yeah. And the thing I would add is on Jersey, it's good because, the independent operators, they're it's not like it's all fun and games. I mean, it's definitely become a challenging market. I mean, we're obviously looking for the high performing stores in the state, but the good news is that their price expectations are extremely, extremely reasonable. I mean, when you can buy stuff for, one or a little over one time sales and, 3 and change times EBITDA, that's sort of the metrics that the seller has. But then when we go in and we say we can go verticalize this thing to over 50% of the shelf, like our other stores in the state. I mean, then it's really lowering that EBITDA multiple a lot in terms of what we're getting, and it also gives us the confidence to bring on these expansions in the facility because we know that we've got more captive stores that are going to take on a good amount of product. And the good news is that we've been very super focused on quality for years. And Jersey has been, they were the ones who sort of like set the example of what great quality looks like, even, starting 3 or 4 years ago. This stuff wouldn't sell if we were 50, 60% verticalized. We'd either lose total revenue if we were only trying to, or largely trying to sell our own stuff. We'd lose revenue, or we just wouldn't be able to maintain that percentage of our own sales. But the good news is the quality really shines through, as is evident also in our wholesale sales. And that's why these deals in Jersey really seem great to us. It's it's our own backyard. It's a place we've got a leading market position, and now we can just bring in good, profitable stores at super accretive multiples.
Is there a certain number of stores you'd like to get to in that state, or is it kind of just on a go forward basis, evaluate and grow as needed within there?
10 is the max. Okay. According to the state. So we want to get to 10, where this Union Chill will be our 4th. We've got another 2 or 3 in the more near-term pipeline. But I think we said on the call we want to sign several other New Jersey deals before the end of the year.
Hey, Jason, I just can't let this go without correcting it. New Jersey, you're right. They set the quality, etc. But for our Maryland team that are on the call, Maryland is kicking butts, and they are catching up, and they are competing neck to neck with New Jersey.
So market share increased by what? 5.9% in Maryland, correct, Ziad?
Correct. In Maryland, yes, in Maryland we improved from Q3 to Q4 from 13th position to 6th position. We strengthened our market share to close to 6% in the state, and we're only one and change away from the second spot in the States. And with our expansion coming in June, the team has promised and are ready to deliver on the expectations. So we think in 2025 we'll jump to number 2 in the state.
So what are you guys seeing in New Jersey? We have conversations with other people that saying it's become an oversaturated market, but here you are climbing basically in market share. What do you think some of the mistakes are being made in the state that you're taking advantage of? Jason, I'll let you handle that one. So,
I mean, Jersey is, it's still obviously, a huge driver for us. We've, I think it's just been that we've been super focused on it. Maybe some of the other players, I'm not talking about anybody specifically, maybe some of these other players are a little bit, more diversified than us, have a lot more states that they operate in, and aren't as focused on it. I mean, we've sort of, over the years, maybe we've gotten knocked more recently about our whole approach of going deep and not wide. We think it served, we always from the beginning, we said that's going to give us the best chance to be dominant players and be successful in any state that we operate in. And I think that's what's happening here. I think it also helps us from growth going further going forward. It helps that we're not in that many states because there's some really awesome acquisition opportunities out there, and we can go grab some of those. Whereas some other companies don't have that flexibility because they're already in most of the good places.
Yeah, and Shad, I just wanted to say, Pennsylvania and Maryland, when where we're really gaining market share, in New Jersey we're maintaining market share. Just for correction.
Yeah.
Purposes.
Well,
go ahead, Chad.
I was just going to follow up. Like you talk about, one of the things that grabbed my interest as far as the press release is that you made the 2 announcement and there's more to come. So based off of that, but looking strategy wise, it played obviously in your favor by going deep versus wide. But I'm assuming that you guys are going to look at and probably anticipate some great expansion opportunities potentially in the future.
Into other states, you mean?
Yeah.
Yeah, we're looking. I mean, we definitely, there's a lot of good opportunity to, go deeper in Jersey and Ohio. And we're always looking at additional states. Ziad really likes Florida. He's not just because he lives there, but because he operated there before he came to TerrAscend. It's a good state because it's fully vertically integrated, so the margins tend to be pretty good. That's a state that we'd be interested in, and we're also looking at more transformational deals with other potentially some other multi-state operators, which would give us multiple states that we would add at once. Yeah. All that being said, we really we're the most excited about going deeper in Jersey and Ohio in the near term.
And in Pennsylvania, which is another one of your markets, it's been a lot of news there has been a lot of news this week coming from the Pennsylvania legislature. State-run stores, a very onerous-looking bill coming from the House side of things. Are you talking to anybody on the ground, or is there any insights that you can give as to how, let's say, the Senate might augment that bill, or what that bill could look like when it does get to something that looks like Shapiro would sign off on it?
Yeah, Z, you want to take that? Z, this has been Ziad's part-time job is shuttle diplomacy in Pennsylvania, so I think he's a good person to answer this question.
Look, Anthony. I think it's when there's a divided politics, it's best maybe not to go into details on what is happening. But at a high level, I think what we can say is for a bill to be signed for adult use to pass and be signed by the governor, you have to start with a bill. If a bill does not leave the House, then you don't have a ball in the court that you can play. So we would have loved for that bill to be a lot cleaner. We've given feedback on it, but the bill was released. Rarely a bill stays how it is. Lots of correction comes in, a lot of negotiation comes in, a lot of feedback comes in. So I think the Republican side, the GOP side, the Democrat side, the governor's office, and the industry will be working together, and there are a lot of signs, encouraging signs that this bill will morph into something that would look like its neighbors, and then we'll spend a lot of time educating and explaining the benefits for the consumer, for the patients and the customers. So I feel pretty good that there's a bill. I feel it's the process. It's the process that needs to happen. And look, even sponsors of the bill said, who dropped the bill, like Bradford said, we know it's not perfect. We know it could be better. So, and then we saw on the Senate side that said, hey, there are showstoppers on the bill. So I think the combination of all this will morph into a bill that would be friendly for everybody, consumer, regulators, and operators.
Yeah, it was nice to see Senator Street yesterday came out and said Pennsylvanians don't want state-run stores. We don't want state-run stores. And he was the architect of the street law firm bill, which did make a lot of sense. Pragmatically looking at what adult use could look like in PA. Go ahead, Jason.
No, I was just going to say it doesn't even work from what are they going to do? They're going to open up state stores and have their employees get debanked because they're breaking federal law.
Think about that.
Yeah, there's just so many. There's all the leases that these government, these state liquor stores have. They'd be in violation of a good amount of those leases. It doesn't work. I think they know that the Senate is going to make some major changes to the bill, and we know that the governor is supportive and that he is not a believer in having the state stores run this whole thing. So I think, we're feeling cautiously optimistic.
Yeah, Gretchen makes a good point. It's the DOA. Lawmakers need to stop wasting our time and show up with a real plan. You might have a valid point there, Gretchen, but timing, patience, and discipline is everything. We constantly hear this a lot, Anthony, and Jason and Ziad will share with you guys just about how a lot of people have to push out a lot of their debt right now to 2028, 2029. You guys right now highlighted 150 million in owned real estate, minimal sales leasebacks, no major debt maturities until 2028. So again, you guys are in a very viable position as far as flexibility and capital flexibility. Are you not, Jason?
Yeah, absolutely. And we've also the ability to finance these future deals that we're working on. We've got good financial partners. We might have some more to talk about that in the coming weeks, but we have access to capital to make these acquisitions. The good news about these acquisitions is they're structured pretty well, where we're paying say a third of it in cash, and the rest of it is very favorable seller notes. But
Really?
we feel like we're in a good position. We're not worried about a debt cliff coming in the next year or so that I know many in the industry are. And just sort of the way I look at it, and sort of speaking a little bit to that comment I made on the call yesterday about 180 million in real estate and cash. I mean, obviously we also have debt, but in my view, we got a business that is doing that did $15+ million in EBITDA last quarter, good amount of free cash flow. In my view, the business supports the debt. So at a market cap of $136 million or whatever it is, with that 180 million in cash and real estate, you're getting something for free. You're either getting the business for free or you're getting the real estate and the cash for free. And in my experience investing in stocks for the last 25 years, there's usually you're usually not going to get yourself into too much trouble. Entering situations that that are sort of it's a lot harder to lose. The risk reward is asymmetric. I think to the upside versus the downside.
And one thing that we were getting a bunch of incoming questions on is the buyback. How is that? I mean, I think there's 620,000 shares purchased, or dollars out of the 10 million. Is that something that strategically you should see ramping up here, especially with the share price where it is? If you can talk about that as far as color goes.
Yeah, sure. I mean, we obviously have we have other good things to spend the capital on, like deals and like some of this growth capex that we're doing in Jersey and Maryland. But last quarter, I think you're referring to, we bought back somewhere a little over 600,000 shares. The window is only open for 15 days, just because of the way you report the prior quarter versus the first quarter ending. This quarter will have a longer open window, and the stock price is lower than it was, and and we're we feel like we're executing even better than we were when we first announced this buyback last summer. It's funny. I mean, Keith Stauffer, the CFO. CFOs are usually like the most conservative, people at a company. And he was just texting with Ziad this morning, talking about with me and Ziad, talking about how he really wants to get more aggressive on the buyback this quarter. There's restrictions. We can only buy, I think, like 68,000 shares a day or something. And I forgot the rules. You can only buy on a.
Is it a 30-day average? Is that how it works?
I'm not sure. I have to go back and look at it, but I was surprised. There were many days that we hit our max last quarter on the day, but you also you can't take offers unless there's another bid along. So there's all these crazy rules, but we're going to be more aggressive this quarter on the buyback, but balancing that with other good uses of our cash as well.
Yeah, Jason, Keith's message was he's prepared to place orders every day to the max.
Oh, okay. There you go. That says a lot coming from a CFO who's usually pretty conservative, but we feel pretty good about where we're at.
Duly noted. Last thing I'll ask: you guys ever heard of hemp?
I was gonna.
Yes.
Good.
Yeah, we have in our dreams we hear about it. I don't know, dreams or nightmares or something.
You mentioned an ongoing evaluation of hemp and its potential impact, and I think it's having. We were talking about this yesterday, Anthony, was Seth Yakutin, who was saying, like, I think there is I don't think we realize the amount of impact that the industry is having on the cannabis space right now. But what do you guys make of all this? And we're starting to see more and more companies, I guess, pivot to the hemp-derived THC products. Is that something to consider? I guess that you guys are at least exploring, because the states that you're in haven't been hit as hard as some of the other states like Florida or Texas. But is it something you guys, I'm assuming it's on your radar, and it's obviously something you're exploring.
Yes. Yeah. Do you want to take that?
Yeah,
I want to hear you say radar also.
Yeah, you like how I say my radar. But anyway, so look, we've done the evaluation. We would be silly and not smart to not recognize the size of the market.
Yeah,
that's doing the threat or the opportunity, no matter which state you are in. We also recognize the volatility on the farm bill and the finalization of it in this year at the end of the year. When you put all of those together, plus how fragmented the market is, how early in the innings is, we're not missing any time, whether you do it today, in 2 quarters, or in 4 quarters. When we compare notes and when we see some who are entering, it's tipping your toes, and there's no real financials yet. And the entry is easy at a co-packing level, but you can go all the way to the cultivation level. So when you put all this and the priorities that Jason shared as far where we can deploy capital, and the New Jersey and Ohio, all those, we're focusing on those until more clarity happens, and we will make the decision at that time.
Okay.
Yep. Yeah. It's not a big impact. It doesn't seem like it's a big, you see tons of brands out there, but none of them are doing a material amount of sales relative to the size of most of these companies. Some bigger companies than us have entered, and it's just it's dipping the toe in the water, like Ziad mentioned. So we're watching it pretty closely. But I'd rather at this point, I'd rather deploy that cash towards buying our stock or buying some more dispensaries.
Good to know. It's a big uptake, right? Dive in deep and don't spread yourself too thin, as you guys continue to say. Listen, always good to see you guys, and glad we got a chance to connect. But big takeaway here is just, like you said, being disciplined. Timing's everything, but a lot of flexibility for you guys moving forward, knowing that there's no debt until 2028. And quite honestly, you're doing well in the markets that you're in. But something to keep eye on as we look at expansion. But a nice announcement, obviously, this week in Ohio, New Jersey. And let's keep in touch. Okay, gents?
Thanks, guys.
All right. Thanks, Ziad.
Yes.
Great strategy. Great strategy.
Strategy's working. And it's one of the stocks that I own.
What do you want in this day and age? You definitely want flexibility and leverage. You don't want to have a negotiation table, no leverage. And clearly they've got it. But it's good to get them on again, just because, you get busy and you're focused on reform topics and stuff like that. But, not as frequent as they used to be. But it's a good measuring stick as to what they've done over 6 months.
They're in some relatively tough markets that they're performing in.
Yeah, think about it.
And growing in. I mean, New Jersey, Michigan, Maryland, those are tough markets. PA is going to be a growth driver for them. It's a testament to Ziad's operational expertise and what they're actually doing under the hood, and the fact that they are maintaining their market share, if not growing, in those markets, and they're able to attain, like Ziad said, a 51% gross margin, calculating in a potential 40% gross margin coming from Michigan. That means the margin could be higher if that Michigan business wasn't there. So, I mean, the blended margin of 51% and being able to maintain that for the rest of the year, it's a healthy business that they're running right now with more room to grow, because I'm assuming Jason will get aggressive, not necessarily aggressive, but active on the M&A front, continuing this year in those markets that they want to go deeper in.
Yeah, well, the team he has up in the Northeast region that we met, that's he's invested a lot of good money with good people with that team. And that's full transparency. And no, TerrAscend is not a client of ours. And just being fully transparent with everybody, that's discipline, timing, and patience. You heard Jason say it, there's a lot of people that went wide, and we just wanted to focus. And that was a risk they took at the time, but clearly now, given the current situations the industry's in, that was the right decision to make, because now they can expand when the timing is right. So curious.
Wide backfired on several operators. Don't want to name names or start to get into the granularity of that, but
yeah,
going wide for the sake of press releases and growing at all costs back in the crazy 2017, 2018, 2019 days, that didn't work out well for several companies.
you can't blame them. You can't blame them because
no, it's an arms race. It was
right?
a land grab. It was who can get a license in each market, put out a press release, stock goes up another 20%.
Yeah.
It was all just planting flags.
Exactly.
And you're seeing right sizing of footprints. We've seen from several operators. I think we'll probably continue to see some of that on a go forward basis. And the strategy is go deep. And then when they can get an asset in New York, Florida, or one of these other keystone markets, I mean, I'm sure they'll be there. There's plenty of assets in Florida.
I know
that are going to be available in the coming quarters to years.
Talk about the original OG names, but Bruce Linton got a lot of flack for deploying a lot of capital and not great assets. But the flip side of that is he put the business side of cannabis on the map with that $5 billion check from Constellation. Yeah. Yes,
I think Aurora takes the cake in terms of acquisitions, which they spent, I think, 2.6 billion and 3.2 billion on Canamed and MedRelief. And then TrueLeaf spent 2.2 billion, or I think 2.23 billion on Harvest, which did give them some accretive assets, but then they also did shed a bunch of the assets.
How long has it been that acquisition as well? It's been 3 years now with Harvest.
Harvest was 2019.
Was it that?
Harvest was before COVID. It might even been 2018. But I'm almost positive the ticket price on that was 2.23 billion.
Leave some comments, people. Let us know the timing on that. Love to know. I'm going 2021. That's my guess. All right. With that wraps up first segment, which is our featured interview on earnings season with TerrAscend. To now bring in the Chief Strategy Officer of Jushi Holdings, which has had a nice little run recently. Trent Woloveck, back to the podcast. Good to see you. Happy Friday. I think you're on mute. You're on mute.
Damn, you are correct, Shad.
2021?
Yeah.
Yeah, I didn't think it was that far. 2019.
I thought it was before COVID.
No. Trent,
what's up, gentlemen?
Yeah.
Sorry about that.
Going?
Yeah,
What's
yeah.
up?
How we doing?
Nice little run that you guys had recently. And I know we're going to get into the earnings reports with Jim Cacioppo next Wednesday. So for anybody that's an investor in the company or watching this, we're going to go in depth. And obviously, great conversation to have with Jim because we know how sophisticated he is with numbers. So we'll get his feedback. But one to have you on, just because it's said off the top, in addition to what you do at Jushi, you got your ear to the ground in Pennsylvania, Washington, some interesting announcement yesterday. Am I pronouncing your last name correctly? Jeanine Pirro, is that how you pronounce it?
Yeah.
What do you think of that appointment, and what kind of implications do you think that has on the cannabis industry, Trent?
Yeah, look, I think it's just a breadcrumb that continues to build the story. When you have, a nominee that removes themselves from a process for, saying stuff, whether it had to do with cannabis or not have to do with cannabis, people can argue or bicker about that.
Yeah.
I think it was a line of a lot of different things that probably, caused, Ed Martin to have to move on. And so, the letter that he sent to a medical cannabis operator in DC probably didn't help his case. And quite frankly, was probably the nail in the coffin, if you will, in excess of, Jan 6 stuff and the litany of other things.
I think it had more to do with Jan 6.
Absolutely. But again, it's just a piece of the puzzle. It's something that was said, and we'll see what happens.
Gretchen writes, it had nothing with the capital on nothing to do with cannabis. We understand that. I just want to get her take because she's been vocal in the past that she's been supportive for medical cannabis, but against full-on legalization. Am I understanding that correctly? Yeah.
She's also another Fox News host that is
exactly
going back into the administration, or not even in the administration. I guess it's for the U.S. attorney in the district of DC. She's coming off the bench.
I got to run for office after my broadcasting career. It already does. I know so many broadcasters that have left in the last couple of years. They're all into politics now, but I get it. you wanted to come on because I know, like, we had Michael Bronstein on Monday. We talked a little bit about PA. We actually just highlighted with Ziad and Jason as well. But a lot of people are up to speed on what we've shared so far and what was presented and how that's pretty much going to go nowhere with these state-run dispensaries. But what can you share with us that's outside of that maybe could shed some light on how this is progressing?
Yeah, I think, obviously House Bill 1200 that just got out of the House was, something that, needed to happen. We've always known that legislation needed to start in the House, come over from the House to the Senate. We've obviously always known that, there was a split in the legislature between Democrats in the House, Republicans in the Senate. We have a great leadership from a bipartisan support perspective in the Senate with, Senator Sharif Street, who's a Democrat, and Senator Danny Laughlin, who's a Republican, who, it's 27-23 in favor of the Republicans. The important thing to remember, Senator Danny is the individual who chairs the Committee of Law and Justice, which is where a bill will have to go through in the Senate. I think, the interesting thing that, multiple people brought up, the Democrats didn't fix while on the floor was the constitutionality of House Bill 1200 itself. And so, from my perspective, I think you'll see a bill drop, within days that will look similar to, what Senate Bill 846 was last year, and House Bill 2500 was last year, which were both bipartisan, one in the House, obviously one in the Senate. And so
then what can people anticipate next steps once that's then presented? Are we now, is this kind of getting down to, I don't want to say the final stages, but we're making progress, obviously.
No, it is.
Yeah.
I mean, game on. So, we are, and when I say Cannabis is now part of the budget discussion.
Yeah.
So the Republicans passed, trans sports and as well as school vouchers very recently. The school vouchers cost money. Everybody knows the deficit that Pennsylvania is operating in. They think it'll be 1.6 to $3 million this year of a gap. They only have $7 billion left in a rainy day fund. They're also getting ready to walk into a recession, and so you're not allowed to operate as a state at a deficit, and so that's what those rainy day funds are really made for.
Interesting.
They're getting really close to where kind of that minimum threshold is to have people comfortable with where the rainy day fund is.
So is that playing a lot on this decision? And in some ways, like, look, you have a governor that's already implemented a lot of this tax revenue within his budget, but you got to think this is a lot of it that has to do with this, is it not?
Yeah, absolutely. I mean, I think, between regulating and taxing skill games and regulating and taxing, adult use cannabis, it's a way to get, $750 to $1 billion of tax revenue into the state annually. And, if that's, moving forward, can they go raise a lot of money off of those two numbers. And so, in a world where they're already operating at a deficit, they need to fund SEPTA, which is the public transportation kind of in the Philadelphia area. They already borrowed 150 last year. They got like another 200 million of a gap this year that they need to fund. And so that makes for a very big number or gap to fill. And I don't think, Shapiro wants to be in a position as he looks to 26 and more importantly, 28 for him to go, raise taxes or slash budget.
Yeah.
Are there any forecasts or any modeling that you guys have done to how the adult use flip would fundamentally affect the business in terms of growth?
Yeah, for us, I mean, we've publicly stated that that's a $40 to $50 million lift for EBITDA.
Okay.
40 to 50 million.
Yep.
Wow.
Yep.
Well, what is it? What is it? 18 of the 44 dispensaries are in PA, correct?
Yeah, we have 41 dispensaries open right now, getting ready to open a 42nd. But yes, 18 of our 41 dispensaries are in Pennsylvania. We also have a 125,000 square foot cultivation manufacturing facility. Jim has said we're putting our money where our mouth is.
Yeah.
We're updating that facility that we acquired.
Yeah,
4 or 5 years ago now, I guess. With some updating one room into 3 rooms, and then updating 2 other rooms within the building. We have plans and plenty of land to build as we continue to see and assess where where the market supply is going to be.
Yeah.
Once we see that flip to adult use, but
hence the reason why you're following this story closely. But wow, 40 to 50 million. I know we've talked about the amount of dispensary footprint that you have within the Pennsylvania, but looking at your overall percentage wise in your portfolio, but I didn't realize it was that kind of number. But big risk, big reward.
Keep in mind, flipping to adult use when you have a grower processor is kind of like hitting oil in an oil well, and so it gushes a lot very early on. That's when you make all your money, and then people come and start building oil wells around yours, or steel frack, whatever you want to call it.
It's a good analogy.
And
so what do you look at that timeline wise then, Trent? The oil is rushing. What do you got? 18 months before you
in a world where the capital markets continue to stay the same. That'll be a while. There's stranded capacity out there for sure. People have shut down facilities or shut down rooms. And so people can turn that back on, but turning back on a room, getting it reconditioned, making sure that the HVAC still works, the lights still work, that doesn't happen overnight. And so, you probably got a 6 to 12 month runway easily. And then, to build out, it's 12, 24 months.
Yeah.
And so you can kind of see that gusher happen for, 12 to 18 months.
Makes sense. All right. Great setup, or great update on PA. And what do you think of some of these new bills, related to SAFER, not related to SAFER, but States 2.0 Act that was refiled, or should say filed, because it's a more advanced of the States Act. But I thought it was interesting from Congressman Dave Joyce, as well as Prepare Act. Still early innings. Let's not get ahead of ourselves, but it's nice to see some progress that's being made. But is there anything that you've seen, heard that can grab some people's interest related to SAFER banking?
Yeah, I've been doing the analyst calls, today since our earnings was yesterday. And I use the analogy of crawl, walk, run, just like what we've, been doing with state stuff.
Yeah.
For the 15 years I've been doing this now, you have to crawl, you have to walk, you have to run. And I kind of put rescheduling in that crawl, SAFER as that walk, and then states 2.0 in the run, and you're like sprinting a marathon at that point. And so I don't want to lose sight of the testimony that Terry Cole gave, whatever that was, a week or 2 ago now,
9 days ago.
Yeah. And so I mean, I was on your program when he was first nominated, and I gave my opinions and thoughts on how he's acted. Everybody knows his past experience or statements on cannabis.
Yeah.
We don't know, but we have a good idea. But we keep hearing this over and over. You got to be in line with obviously the president's view, and everybody that's within this cabinet is following suit. So people may question that. I can't prove it, but with people talking to close circles within this administration, that's what we continue to hear. And when you see stuff like this happen, you can't help but believe, right?
Yeah, look, I'm not saying he's going to do it, but he did say two very important things. He acknowledged that rescheduling was going to be at one of the top items.
Yeah.
On his priority list.
Yep.
He would have never said that if it was just him and his opinion. So
Correct.
Something changed there. We're all grown up, so we can all make our own assessment. But something changed there. You can go back and listen to my statements. A couple months back now, and then he also said, "I need to go look at the science."
Correct.
Well, there are 260 plus pages of the science with the best, some of the best minds, I'm sure, in the United States that work at HHS and FDA. And so I'm not sure how much more science you need around understanding that cannabis should not be a Schedule I narcotic.
Yeah, that was my takeaway. It was more based on science and data than ideology, which I've said a few times. Anthony has too. But this working group, look, he is the boss, the head of the DEA, right? And which feels different because this conversation has brought up before, is that there's 252 pages of that OLC memo?
No, there's 252 pages of the HHS report, and then the OLC memo, and then the OLC memo legitimizing the two-step process that was used and the science that was used in the HHS report.
Correct.
Which you saw Judge Mulrooney when, I forget, it was CADCA that gave their testimony within the first session of the ALJ, said they wanted to somehow go against the OLC. He actually laughed at them when they proposed that was their strategy and that's what they were going to do. He was basically like, good luck. And then who's it that we had on? Oh, Shane, when we talked to Shane about that, as far as overturning an OLC memo, it can be done, but it's very, very difficult, and essentially has to be Donald Trump or the OLC come and give reason to overturn the opinion that they already made.
Spot on.
It's like it's hammer and nail.
Yeah.
As far as
OLC. Exactly. So, when you actually understand that, excuse me.
Yeah.
Those statements are very, very strong.
Very.
Yeah. As strong, or as I guess as revolutionary as the HHS report was, the OLC memo has more implications than that report, because that legitimized everything that came out from the HHS.
And it's very important to note, all of that is on the public record, and the industry needs to keep that public record as public record.
Yeah, I actually read some stuff. Before, as I said, HHS recommendation. 2, a binding OLC opinion. 3, a fully documented record of how the DEA under Ann Milgram handled this process, including alleged missteps. And finally, 4, most importantly, a nominee publicly committed to reviewing this as a top priority. That's why it feels different this time. So anyway.
Yeah. And I would say, the last piece that I'll throw out there, because I've had conversations with, Senator Hawley, and some few other folks, that understand this, from a cost perspective, from a Doge perspective, we as the American taxpayers are getting charged $8+ billion to carry, ongoing prisoners that are non-violent, cannabis folks, from trials, through to incarceration. And boy, that's an easy $8 billion to wipe. If you've seen what Elon said, if you've seen what other people have said, again, it's just breadcrumbs, and people can continue to make their own thoughts. But at some point, the Republicans have truly followed through on everything they've said. And it's starting to get to the point where Hansel and Gretel are eating those breadcrumbs all the way into the cave. We're about to come out the other side.
I wrote this down actually last week after our interview that Anthony was just saying with Shane Pennington. He said the OLC memo, which Shane calls the elephant in the room, this legal opinion has authoritatively resolved major legal questions surrounding cannabis rescheduling, including treaties and medical use standards. And remember, no one except the President, Attorney General, Congress, or the OLC can override that opinion. And that's pretty much bang on. So if you got somebody basically saying that they're going to review it, he's the boss. So that's very encouraging. But we shall.
Yeah, and just a quick response to Gretchen. They that's right. They're not interested in full prison reform.
Correct.
However, when you talk about non-violent cannabis only offenders, that's not a huge population, and rescheduling gives folks cover at the state level to actually revisit and resentence and or do clemency. And so I'll be the first to admit I didn't, in Virginia, where we've worked on a bill and got it passed in 2021. We missed a few things from the social equity prison cannabis reform perspective, which was clemency and resentencing. I had no clue that the sentencing grid for nonviolent cannabis offenders, first-time offenders, was actually created in 1994 with Joe Biden.
Of course.
And
it was the crime bill, wasn't it?
It's the crime bill.
Yeah.
And so I said, boy, cannabis in 94 is very different than cannabis in 2025 from whatever we have. 39 states that have medical cannabis programs, 24 states that are adult use program. We had 0 in 1994. And so the fact that hasn't been looked at or updated, both at the federal level, but at the state level, quite frankly, was shocking to me. Not to go down that rabbit hole, but it all ties together with conversations that we've had, that I've had with folks on the Hill, and fentanyl and the litany of other things as well. That are the buzzwords.
Lots changed since 1994, including O.J. Simpson, who's now dead, and I think he was pretty popular back in 1994. Was he not?
Was he still playing? I think he was still playing football.
No, that was the year that the whole trial when the murder.
Oh, that was the year of the trial. Okay, yeah, I was like a whopping 9. So,
how old are you?
8. I was 8.
What year are you born?
85.
Oh, so you're only 10 years old when that verdict came in 95.
Yeah.
Sorry, I'm showing my age.
Yeah,
I'll shut up now.
I was 8.
8.
Yeah.
Listen, always good to catch up with you. I'm glad we talked about, like you said, just some of the stuff that's happening in Washington, and then PA as well. I think,
and I'd be remiss to say, we continue to get good news out of Virginia. The Republican Party is continuing to step in it, with the lieutenant governor and his little tiff with the current governor. So, we feel like we're in a great position to come out on the right side with adult use cannabis, early next year as well in VA.
Yeah, I guess so. Tell Jim we say hi. Look forward to catching up with him next Wednesday to talk about latest earnings, and appreciate the update. And let's keep in touch, okay?
Awesome. Thanks,
right.
gentlemen.
Thanks,
Have a good one.
Appreciate your time.
Take care. Bye.
Stuff. I know we've talked about this in the past, that a lot of their, portfolio of dispensaries, 18 of the 41 in Pennsylvania, but those were some pretty staggering numbers I was unaware of that he just outlined. But impressive. Chad Bales drives a white Bronco. I don't know who that is, Guap, but you may be right.
Yeah.
All right, that wraps up this week. We got Boris Jordan, Cureleaf, coming on Monday. Bina Goldenberg from Organigram coming on Monday. And then, as usual, our weekly recap, which will probably be our weekly update from PA with Michael Bronstein from Attach. So that'll be very, very interesting because, as you guys just explained to me, once this bill's submitted, we are now into, I guess, home stretch, which I was trying to understand how this all works, but I didn't realize that that's promising. But now I can understand why people are saying like this could happen. So it would be huge. Anyway, anything else you want to add?
I'm good.
Good.
I am good. I got more earnings to read I got more earnings to read this weekend, and then get ready for Boris on Monday. That'll be a detailed conversation into what's going on with their business.
I'll have a full recap of the week that'll come out on Sunday, everybody. And as well, keep those likes, comments, views coming with some of these evergreen videos that I'm doing. 300,000 views now in a video I did last week. And it's been incredible. And because of results of that, I think we've gotten close to 2,000 or 3,000 new subs in the last couple days. So big thank you to everybody that's given the support here at TDR. And let's keep the momentum building and get not only existing people, but new people involved in this community, and shed some more light on the overall cannabis industry that we believe is going to be, hopefully, and I do believe it will be, in a lot better shape later on down the road if we get some cannabis reform. But with that, scan the QR code if you want a full recap of our takeaways from this week's earnings so far, with the trends that we basically have seen more notably. And like I said, if you want to get all that information, make sure to scan that QR code, become a baked-in newsletter subscriber, which is delivered to your inbox weekdays, Monday through Friday at 8 a.m. Eastern time. Enjoy the rest of your weekend, everyone. We'll see you back here Monday at 4. Thanks, AV.
Thanks, everybody.
Now, that was a good one. What'd you guys all think? Did you like what we had to say here today? Do you agree, disagree with what we're saying? Love to get your feedback. As usual, leave comments below. Trade to Black is growing, and we wouldn't have done it without you. So if you haven't done so, please subscribe to our YouTube channel. You can also check us out on Apple and Spotify for the audio version. And as usual, leave lots of comments. We, as I said, love to hear back from you. Thanks again, everybody, for watching.